What's up, everybody? It is Friday, March 17th. There's obviously never just a little bit of news in the Tesla world. So I thought it would be great to do a quick weekly catch up, specifically with three special guests. So let's add in Herbert,
Everybody.
Jeff,
Everyone.
and of course, Amy.
Hi.
So thank you guys so much for your time this week. But I thought it would be awesome just to kind of quickly sync and catch up on the latest news. And obviously, what better person than Herbert to lead us off on the discussion?
Awesome. Yeah, this has been a slow week. Jeff and I were just talking about, wondering why it is a slow week. Of course, there's tremendous news about the banking crisis, but in terms of Tesla, there was a few. There's a lot of good news, not good news, but a lot of news that wasn't so good for all the competitors of Tesla. So this week started off with Rivian and Amazon having their initial kind of a beginnings of a beef. So they had a very exclusive contract signed. Rivian or Amazon promised to buy 100,000 of their vans from Rivian. They ended up only doing 10,000, and so Rivian decided to, is trying to break off the contract to now make it non-exclusive, so that they can then sell outside of that. So, this is signs that possibly Rivian is in trouble, and they may not be able to be, some other big backer might have to come in and do that. Of course, Jeff did a very good job of trying to, bring back the concept, the big news about General Motors doing the voluntary buyouts to a majority of their white collar workers. That was a important news to revisit because, again, it's like what's going on with them and how is this happening? There was news also that there was because of the price war started by Tesla. A lot of the Chinese auto manufacturer stocks actually started to nosedive, including BYD. So BYD fell by 11% in the Hong Kong index. And I think all the other ones, including SAIC, fell by 7%. And then it's spreading, of course. Now that Tesla did their price war, we saw the Chinese auto manufacturers respond right away. And we had some holdouts, but we then saw BMW and VW join the five automakers in their price wars as well. There's news also that Volkswagen is trying to beef up their EV battery cell manufacturing, and so they chose Canada to do it. And just this morning, there was news that Volkswagen actually committed funding to really build into mines. So now, Tesla said that they're going to get into mining. Volkswagen said they're going to. That's breaking news. That came out like just an hour ago, I think. But yeah, so Amy, I'm sure you want to. You're gonna. I need you to find out more. Dig into this. Got it. Dig into this. Find out what's happening there because they did not say how much money that they're going to invest in that. And then we've got. Let's go here. Then we've got. Boom. So of course the Credit Suisse was about to go under, but there's no way that that will go down. The Swiss government is going to prop it up, and in fact, a few days later, after just a couple of days ago, they did say that they're going to protect it. The interesting thing about the German auto manufacturers is that they had a record profit year in 2022, but they had significant declining in unit sales. So that kind of makes their profit look good, but that's all cars. When you then look into the EV cars, it's much less. And then there was news this week, a couple days ago, that Tesla overtook the entire Volkswagen Group in electric vehicle sales in Norway. So that's just signs of things to come. The strength of the brand loyalty is very strong, but Tesla is showing that they can break through that brand loyalty, and you're starting to see it. And whenever we see things in the leading countries like Norway and Europe, we see that everywhere as well. Let's see what else we have here, and just one more bit here. I think the big news that I think we should all be excited for is that Tesla announced that Giga Berlin is doubling their productivity on their existing factory. So they're expanding the factory to be able to do not just 500,000 cars, but 1 million cars. And then they also applied for permits to expand the factory. So kind of like the thinking here would be that if you, it was you, Amy, right? Was this you, Amy? Yeah. Yeah. And she reminded us that if it takes a factory, remember that Tesla has shown very clearly how they're going to reduce the footprint required to build their cars, even up to 50% reduction of the footprint required in an existing factory. And then they expand the existing factory by 2, and then they're going to expand the actual square footage of the entire factory itself with the permits of additional. They don't need to necessarily build net new ones. They can just take the existing ones and just quadruple, if not even more, how much they're doing. We saw Volkswagen announce their new car, and oh god, it's so frustrating because it's a concept car. They're calling it, what was it, Amy? VW ID2. It's the ID2 All.
Yeah. Y'all is what you were saying.
Y'all. Yeah. And it's their competitor to the Model 3. It's a compact car. They said it's going to be less than €25,000. It's spacious as a Golf, affordable as a Polo. It's the car for everyone and every day, but it's just a concept car. And every time they come up with a concept car, it doesn't ever happen. It's very unlikely it's going to happen. It's a press release, Amy said. And but they made waves. They did what they did, which is all the newspapers are going, oh, Volkswagen's going to beat Tesla, but they have no kind of like measurement of how they're going to build it, where they're going to build it, and it's just a concept car versus Tesla, of course, has all the details of exactly how they're going to build the compact Model 3 and the compact Gen 3. And then so it's frustrating to see the media talking about this everywhere, going they're going to beat them to it. And then the other frustrating part was, if you look at the actual inside of this car, the concept car, it's basically a Tesla. It looks exactly like inside a Tesla. So they just took a look at Tesla, drew it up in a few hours, released it, and did their best. Yeah. So I think those are the big news.
Yeah, Herbert. So thank you first off for just all that you do, just keeping the list together. That's awesome. One quick question I had was, and wanted to get everyone's thoughts, is as we step back, clearly there's just a lot of stuff happening on the macro side right now. And it seems like stuff going on with Rivian is obviously getting pretty nasty. And I think, at least from my perspective, it doesn't seem like the economy is going to be getting better anytime soon. And so I think what's going to happen is, at least in my opinion, again, depending on how long this recession goes for, and from my perspective, I don't see it getting better anytime soon. It's just, you're going to start seeing more and more companies just really struggling. And I don't know what's going to happen with Rivian, even Lucid. I can't tell you how many times I'm on Instagram, I see ads for Lucid all the time. Their sales reps, I had wanted to do a test drive. And so, their sales reps are pretty persistent, which I understand, but so I'm not going to hate on them for that. But it's just one of those things where you're starting to see Tesla is able to flex down their pricing. I think it was Porsche that actually is flexing up their pricing by 10 to 15%. I think I saw a Porsche Teslarati article on that. So it's pretty insane that companies that are being really hurt by all of the increased prices. I mean, every day I'm getting a notification that some random price is going up, like YouTube TV is going up from $65 to $73. It's just every day pricing and inflation is just hitting us even harder. And so I think, you're seeing the signs of it happening with Rivian now. Obviously you'd seen it before, but I don't know if anyone wanted to chime in on that, just on the competition and how these EV companies are really, the legacy companies, but also the new companies.
Yeah, I would say one of the things about the points that was made about VW by Alex, who does such great work about that, is they're only planning a 4% profit margin now, and then they bring out this EV, and they're funding both their legacy business and the EV business. I mean, this is going to really, really hurt legacy auto that has two different business models to fund. And then we already know that BYD wasn't making the type of profit margin that Tesla was on their vehicles. And Elon Musk has been planning for this and been warning for us about that the economy didn't look good on earnings calls for a long time. And that it's not an accident that Tesla is very high cash rate at the moment and low debt and positioned to fund even negative margins if they need to keep the pedal to the metal, to use his terms, and keep that growth profile happening. And that's his number one priority, is the end result of a sustainable future. So I think that Tesla's in a really good position, but it's sad to see all these other companies hurting to such a level.
And yeah, that 4% margin that Volkswagen said was a projection. And every time they make a projection, it's usually even half that. So we might expect 2% is the actual that will come out.
Yeah, I mean what they did was exactly what we've been describing, which is, take, shine that, take the cover off and show the car, but not show the underlying how they're going to build a business with that car, with that model. And Tesla did the reverse. And I think as advocates, investors, people watching the company, I feel much more comfortable with the company that's explaining the how versus just uncovering and saying this is what it's going to look like, see in a couple of years. And then on the macro side, you also have to feel good that everything that Tesla's been doing, they were first, to actually look at and do some of the OpEx cutting, even early last year, right? They were one of the first to do that. And you see all the companies like, that weren't doing anything, now all of a sudden they filtered in and are doing that. And you can just tell in all of their presentations over the last 6 to 8 months, there hasn't been a tremendous focus on cost structure. It's been a tremendous focus on more and more models, like this segment, that segment. But it was like, well, what are you actually going to do in that segment? And then in like one line of small text in an earnings announcement, you hear from Ford, you hear from GM that, they believe they'll make anywhere from low to mid single digit margins in 2 years in EV. So and then you hear supply issues with that. And what basically happens is they're not capitalizing that space at this point, and they don't know how to capitalize it profitably. So it's going to be interesting. It feels like VW, GM, Ford don't have a viable business model yet in EV, but they know from on an optics perspective, if they don't talk about EV, if they don't unveil EV models, their valuation will be subjugated to like being an ICE kind of dinosaur. It's interesting.
Yeah, it definitely is really interesting, and really shocking. I think it was, remember when we had these big price drops for Tesla back in, I think it was January, when you saw anywhere from 10 to 20% price cuts on all of the models for Tesla. And I think Ford was doing whatever they could to get back into the news, and they barely had any price drop. Maybe like, well, I'm kind of making this up, $2,000 to $3,000 off the Mach-E.
Right. Yeah.
And they had all of the press releases. They probably put a bunch of advertising dollars behind it. But and that's kind of, maybe we can even transition into the VW announcement about. But really, I agree with you, Jeff, as far as there is nothing sustainable about the business models that these other companies have yet. Tesla, if you think of the timing of how Tesla, and again, Amy and Herbert, you guys would know all about this, but just if you talk about the pure timing of Tesla, one, the difficulty to make it, but they were able to go top of the market down. And now these companies like Lucid and kind of even Rivian that are still trying to be at the top of the market and work their way down to get into this, sell these high AOVs and then be able to use those dollars and to put back into R&D. They're not able to do that because, to be honest, we're already at massive scale with Tesla. And so that has put a lot of friction, because no one's going to go buy a $160,000 to $200,000 car like the Porsche Taycan, because they can get a Plaid Model S now for what, $110,000. Like, you could at that point, you could get almost 2 Plaids for the price of one Taycan. Like, so I think it's just interesting. Yeah, it's an optics thing. These companies want to do whatever they can to stay in the news, to stay relevant, to get the view off of Tesla in some way, to say, here's the next Tesla killer. And then you have ads for the next 2 to 5 days, and everyone thinks that Tesla's going under, because they obviously don't know enough about the company. But it's just really interesting business model and a really interesting time. So, but yeah, I would love to get your thoughts on the VW concept car. And I think, I don't know, maybe Herbert, you had mentioned it. It's like all these concept cars, they obviously don't ever see the day of light. So if you have any history there that we could share. But I would love to just, talk
Yeah.
about that.
Well, let me share what Alex Voigt said. Alex Voigt, obviously he's based in Europe. I think most of us here should know him. You should follow him at Alex_A Voigt. He said, reasons why I do not take the ID2 all seriously. Number one, VW never delivers the concept they presented. It's an two. It's full of outdated tech and software full of issues. 3, by 2025, Tesla would have delivered its next gen for a full year. Number 4, this is what I just said earlier, which is Volkswagen plans 4% margin this year. So then if you think about a $25,000 model, it's going to be negative margin. If they can only do 4% of margin now, how's that possible? And then 5, he thinks it's likely a compliance car produced in small numbers. And of course, our very own Amy cheekily says, press releases are apparently easiest. And then she correlated to how prototypes are easy, production is hard. Press releases are super easy, but will the Wall Street analysts give Volkswagen stock upgrades because of this announced? And then she called it a Tesla Gen 3 copycat, even though no demonstrated cost savings, support the price target, or planned production date. So I think that says it all. Nicely done, Amy.
Thank you. But we're seeing that in China right now. There's, cattle actually was having an oversupply of batteries earlier in the month because there's all these prototypes that were announced. Like at one auto market alone, there was 24 self-driving prototypes announced, where they don't even necessarily have this. They were pairing up with Baidu, which is actually more a better solution than many for self-driving, but it's still geofence. So, of course, those cars never came to market, and cattle ended up with too many batteries. And then Tesla announced that the power walls were no longer hooked to solar, and cattle suddenly doesn't have too many batteries anymore. But we're seeing that it's even creating a problem in the supply chain as these prototypes are announced, and then they never make it to market, but they've started to contract some of the supplies. And Jeff would be a great person to talk about that, about how long it actually takes to ramp up the supplies for these new products.
Yeah, and as a supplier, it's a great point you bring up, Amy. As a supplier, you want to deal with OEM partners that you have confidence in, that aren't experimental in terms of their product line, and also not vast in the number of SKUs that they have. And that right now, from a volume perspective, that's Tesla, and that's actually one of the big issues in this space, and it's going to continue to be a problem until, I would say BYD is emerging with some steadier volume at certain price tiers, but they make their own batteries. If you're cattle and you're looking at, like, where am I going to, when I get a demand signal from an OEM partner, where am I going to have the greatest amount of confidence? The greatest amount of confidence is going to be in Tesla, because they point to a number and they steadily move towards it. And the other thing that's happening is when, if we are going into a recession, or if we are already in a recession, the demand signals that were sent out, 6-12 months ago, they're getting pushed out, especially now over the next couple of weeks. We're nearing the end of a fiscal quarter. And I know sometimes we don't want to talk in those terms, but that's a real thing for a company like cattle, and they're probably getting a lot of demand signals and a lot of supply, pushed back to them. So again, starting with like the unveil of the car and not really understanding the business model and how we're going to get there versus the underlying mechanics of what Tesla did at Investor Day. I hope this becomes more and more evident. And I think it is to the analyst community, but if it just gets out there further and further, like, this is really something special that they're doing.
Can I ask a question? I want to hear you guys all think. If you think, how likely is it that Tesla's going to be able to get 20 million cars by 2030? We saw Gary Black going at it, explaining all his reasons why you can't just assume, just because the management says 20 million, that Tesla is going to be able to not only, make it, but also sell that amount. But I'm going to share some very interesting tables that I found at my show today at 12 noon Pacific with Brian. And there's a very fun fact. Okay. If you take all of the OEMs projected EV targets for 2030, if you just add them all up, including China, every car company and what they say they're going to be able to make, including Tesla's $20 million, what do you think you get? If you take their EV targets and you add it all up, you actually get 100% of the current auto sales. Okay, it's just a fun fact. But what's interesting about that is that takes the Tesla to be able to do 20 million. Now, if they can't do 20 million, or put it to the other way, if any of the other car companies can't hit their targets, are we confident that they're going to be able to hit their targets of what they think they'll do by 2030? If they can even hit their targets, it's wide open for Tesla to go way beyond 20 million, if not. But I'm just curious what you guys think. How likely is it for Tesla to sell 20 million? I don't know if you guys were following what Gary Black was saying, just simply that you can't take the management just because they said they'll do it, that there's not going to be demand for this, that, I don't know. Yeah. The numbers don't make up. Like if Tesla ends up getting 20% of the market, in order to get 20 million, they need to get 40% of the market is what he's saying. And it's just not going to happen.
Yeah, my opinion would be that, I definitely think from an execution perspective, I don't think that's going to be an issue. I think the biggest path to get there is going to be the $25,000 compact car. That is, and obviously that's where they're headed. So I definitely don't see an issue for them to execute, to build the factories needed to, and obviously based on all of the vertical integration that they are now doing. I mean, getting into mining, owning every aspect of the supply chain. I definitely don't have any issues with them being able to execute and get there. I think, the question is more of like, market share and growing from there. But I think that they will be able to once they do that. Because if you look at even BYD, let's say, BYD is obviously taking a huge market share. They obviously have the backing of the government, and I believe they're losing money, if not barely breaking even on all of their cars. It's not sustainable. So it's just going to be one of those things where the government will have to continue to prop up that company, especially as they grow. Whereas Tesla, again, we're in this situation where Porsche is releasing 2 to 3 new models and they're increasing prices 10 to 15%. People cannot compete with Tesla and where they are at this point in the market, where Tesla can continue to pull down their prices of their cars and continue to stay very, very profitable. And even at the 25,000, even if they took the Model 3 and went down to the $25,000 price, especially in China, obviously they won't be that, kind of growth company or, what everyone's baking into their models right now as far as like big margins. But they could, if they wanted to, and still compete, still survive, and still have positive cash flow from those Model 3s. And I don't think people understand that. So now that they're looking at this next generation platform, they can easily get there, especially if it's going to reduce their cost by over 50% or at 50%. So I'm personally bullish that they definitely can get there. They definitely can execute. They're going to need a lot more factories for sure. But it's just going to be one of those things where, obviously they need to continue to market and to continue to execute, which is, it's insane to even think that that's even possible. Right. It's not like you just sign up tomorrow and it's not a free subscription or an email that comes to your mailbox and it's like, boom, $20 million, 20 million cars. But it's one of those things where it takes a ton of effort, a ton of hiring, obviously execution of the team and the executive team. So I'm pretty optimistic that they can get there again without any crazy headwinds, economically, which we're currently seeing. So outside of like macroeconomic, I definitely think that they can get there, but I think it's going to be based off of the next gen platform and getting to a compact car.
Yeah, I think it's really dangerous to, first off, I like your points, John, which were everything that Tesla is doing from a portfolio perspective, from an engineering product perspective, from a factory perspective, capacity perspective, a VI perspective, they're setting themselves up to be able to do this. What I believe is dangerous from an analysis perspective is to take historical norms and apply them forever in the future. Because I've lived through that in a couple of different businesses where that just doesn't happen. And if you're on the other side of it, it's actually quite painful. And I wouldn't prescribe to saying, well, no car has ever sold more than this much per year. No company's ever had more than this much market share. It is ripe for disruption. What you're seeing right now is playing out right before your eyes. And before, without understanding what the companies were actually doing and thinking like they make cars, they make money, they'll take the ICE powertrain out and they'll put an EV powertrain in and they'll just continue to make more cars and more money versus actually focusing on below the hood of like what are they actually doing to engineer these vehicles? What are they doing in software? What are they doing in not only vertical integration of the factory, but vertical integration of their company and actually all the things that they do in their company versus what these other companies do. And what you'll find is it's just ripe for just complete disruption. So it's very dangerous to do historical norms and apply them, for the next decade. Now, and just the final thing on 20 million. I don't know if it's going to be 20 million by 2030. I don't know if it's going to be by 2028. I don't know if it's going to be 15 million, but it's going to be a significant market share and a significant statement in the market. And Tesla will be very well positioned. I don't know the exact number, but I would really stray from historical norms here.
I would agree with that. And I would say that also there's, I don't know if it's a deliberate misunderstanding, but the 20 million is EVs, and that includes semi and any other commercial vehicles that Tesla comes out with. So as soon as you add in those commercial vehicles, you can easily hit 20 million. Now you're not talking about comparing a Gen 3 platform to what Toyota Corolla sales were. And I also think that there's a little bit of an issue because an EV still looks like a car and is used like a car, that they're comparing something that's completely disruptive to an old standard. I would say it's equivalent of saying Netflix was never going to have a large share of the video market because Blockbuster was still out there competing, not understanding that Netflix was eventually going to completely displace Blockbuster. And then it becomes a matter of who else is actually in the disruptive technology too, because it turned out that Netflix competitors was never Blockbuster, but it was these other streaming services like Amazon Prime and Disney and other companies that came in the new tech.
So I got another question for you, Amy. So even if all the OEMs are able to do everything just Jeff said, right? Actually be able to produce supplies, be able to produce the manufacture and create these cars, all that comes to play. The biggest issue is battery constraint. So the mineral constraint. And there's only going to be 1, 2, or 3 major players that is going to have the volume large enough to be able to sign up these contracts, right, Amy? And so, and that's why Volkswagen, we heard today, is now going to get into mining because they're afraid that if they don't get into mining, they won't be able to lock in all these other contracts. And long term, you need to go big in order to have the large enough numbers to be able to do that. And so, Amy, what's your comment on battery constraint actually a negative, but turning into a positive when you think of Tesla being the leader at this point?
And I think that Tesla, we're always kind of looking at yesterday's problem with Tesla, and so are the other auto manufacturers. But if you look at Tesla, they now have a dry electrode battery process. And the 4680s are now automated and ramping up. And that dry electrode battery process is going to be such an enormous cost savings that, the problem isn't necessarily just the raw materials now for the other auto manufacturers. Is the battery tech is going to be so outdated. And that's just the way that Tesla operates. It's why Elon Musk has said that patents and building a moat is not necessary, because innovation is by far the better way to protect your patents. But, Tesla has these, as you noted, these long-term supply contracts in place, but not all their supply is locked down. They also just rely on, we'll have Jeff talk about this next, that long-term relationship with their suppliers, where they know the suppliers can can be sure that Tesla is going to take all the battery components that they can send their way. And we just had an example of that with cattle. So that's something that Jeff should really speak on more.
Yeah, thanks, Amy. From a long-term perspective, I mean, Tesla's entered. We've seen all of the announcements, and there's probably more announcements that are being spooled up right now. They have certainty of demand, and they have certainty. They have certainty of supply, and from a perspective, Tesla's approach is going to be very unique in the auto industry. There's going to be BYD, and there's going to be Tesla. And just making your own cells, making your own batteries, and they're not just making today's existing technology. They're making a technology that's going to allow their factory footprint for batteries to be smaller, more compact, ramp faster, and just have better performance in vehicle. So they have an advantage of, from a pricing and leverage perspective, all the battery OEMs want to work with a Tesla because there's just certainty of demand. And Tesla has this, well, like, look, we're building our own thing. We know the cost structure. We know it top to bottom. We know what we can do when we build and sell batteries ourselves. If you want to be part of this ride with us, which Tesla has openly said, they need every battery from every manufacturer that they can get. They're going to get very competitive pricing, better than most can get. And it's a very unique situation, especially with where the battery manufacturing is happening and kind of where Tesla is as an OEM. Because, there's an article I think about a month ago of like, hey, new pricing coming out from cattle. Everybody's getting these great numbers and discounts. I guarantee you Tesla had that pricing earlier and much better, just given that, again, there's certainty of demand. So it's, everything I'm seeing right now, it seems like there's kind of a little bit of like, hey, we saw Tesla do this, so we got to put something out that's kind of like it, whether it's getting into mining, whether it's release of the ID2. Something we haven't talked about on some of these shows would be interesting. I'd love to hear some other feedback. There's going to be EV consumption and this EV adoption rate that occurs over the next decade. And then there's still going to be ICE cars. I wonder which of these ICE manufacturers are just kind of holding on to that so they can be like the best ICE manufacturer for the next 10 years and just like dabble in EV. Sometimes it feels like that. And sometimes it feels like they're not going for the EV crown. So it just be an interesting thing to think about, of like, someone's going to be the best non-EV manufacturer. Who's that going to be, and who's going to be around? Interesting.
Yeah, I thought it was an interesting point, Jeff and Amy, that you guys were making, in that it wasn't, the thing that killed Blockbuster wasn't necessarily Netflix. Obviously, Netflix was the disruptor, but it was really all of the additional streaming companies. But I think it's obviously Tesla is the Netflix in obviously the video industry and really just disrupting it. And so it's really, in my opinion, as Tesla isn't focused on just having, they're not focused on, what everyone else is doing. They're focused on the next 5 to 10, 15 years. And I think that was the big thing. Amy, you had the privilege of going to Investor Day and actually attending it in person, but no other company is thinking 10, 15, 20 years out. And I think that's really, a lot of these companies in 10 years from now, will they be around? I can't honestly say that. I mean, there may be an aspect of it, but it could actually very well be, some of these companies either completely revamping or a bunch of new companies in the mix, because the way that they're, as we said, they're trying to manage two businesses, obviously the ICE business and then the EV business. And the EV business is going to be very unprofitable, especially as they have to retrain their mind for decades and decades of spending money and building and not really re-innovating. I mean, how come we don't have a gas-powered car that is that barely breaks down, that can go have like really good miles per gallon? I mean, we're just, sure, you have the hybrid, but it's just it's something that they've been holding on to. And so I think that's the thing that is insane, that when you think of Tesla and where they're at, no one else is thinking like them, and everyone else at this point, at least even optically, they want to look like they're catching up, or that they're in pace, if not ahead, or they're putting out an idea that Tesla hasn't put out yet, even if they don't even have an actual path or supply chain to get there. And so I think that's the thing that will always keep me knowing like Tesla's just that far ahead. And I think, again, when we look at the future, there's no one even close. It's, and as Jeff was saying, from a supply chain, not only is the demand there to make sure that they can pretty much take all the supply that these companies have. And I think it was at Investor Day that they finally said that supplies aren't an issue. Like, they can literally build as many batteries as they want, which is just insane to think in 2023. We're at that point now where if they could build 20 million cars a day, potentially they could get there. I mean, again, that's it's that I'm not giving any forward-looking statements there, but either way, it's just one of those things where it's insane to see this company. And as I think Jeff was saying, is what company is going to be the one that actually potentially is able to stand up and either focus completely on ICE and then dabble in EVs, but we'll see. I think Herbert.
I want to jump in because you guys just reminded me that the Netflix blockbuster story is so similar to what's happening with Tesla at this point. And let me just walk you through a few things that happened that I think is very similar. So number one, Netflix almost died. And when they were trying to grow before they had 5% of the market share, they were trying to sell themselves to Blockbuster. They went to Dallas, they went up to the building, they tried to sell themselves, and then they laughed at them. And then secondly, Blockbuster came out with a competing streaming service that almost killed Netflix. So Blockbuster had all the retail stores. Then they offered a competitive offering to Netflix. They said, why buy you? I'm just going to copy you. And they started creating that. And they even had a better streaming service because it wasn't streaming yet. It was a DVD by mail. But what they offered is you can do exactly what they did, which is, subscription fee, get as many DVDs you want. But with Blockbuster, you can return those DVDs to any retail store if you want and get a new one faster than waiting for the mail. That was critical. Netflix they were scared. The executives there were freaking out. They were about to die. Blockbuster was about to win. Blockbuster's earnings will continue to grow. What killed the Blockbuster? Not Netflix. It was because of them trying to do both at the same time. And they were having this huge debt. And because they were supporting all of their retail stores that they had. And because of that debt, that's what made them just basically collapse and die. So this is the same story that's happening right now. We're watching, these ICE makers saying, hey, we can do exactly what you're doing. Now you're investing in two different technologies, but their debt is so high that the economy is hitting them hard. This new competitor price cuts, they are at any moment gonna just flip, and then that's it. They won't be able to survive, or bail out, which I really hope doesn't happen, but everybody's telling me it's gonna happen, guaranteed. Government here in the US will not let GM or Ford die. But it's like, why do you support these guys? The other thing I want to ask you guys though is, Jeff was saying that that at some point there's going to be still demand for ICE cars, and so I want to look at the graph of when ICE cars fall down and when you guys think it's going to, how fast it will happen or how slow it will happen. So you're basically thinking, Jeff, and you might be right, because this is the normal thought, that by 2030, there will still be 50% ICE cars. I'm not putting words in your mouth, but I'd be curious to see what you're saying. But there is a potential that it's a lot faster, where people won't buy maybe 20% of ICE cars at that point. Like, it's a total collapse of desire for ICE cars, knowing that if you buy an ICE car today, 2030, let's say 2028, that it's going to be worthless in 5 more years after that, knowing that the ICE cars are cheaper. Why would you buy an ICE car if it's much cheaper? By that point, we're already at price parity today. By that point, you don't have to pay for gas. It's going to be cheaper by buying it right off the bat, cheaper for insurance, cheaper for gas and the cost of ownership. Why would you buy a nice car?
Yeah, the FUD and some of the facts last year were true of, like, EVs are these $60-some thousand things, and you can buy a car a regular car for 20 or 30, but the actual average aggregate difference between EV and ICE, I believe, when inflation was hitting, was about $6,000 to $8,000. And then in the United States, with the tax credit and just with all the work that Tesla has done on the EV side, yeah, they're basically getting to parity and even below now. So to answer your question, Herbert, is it's really going to track with the price curves as the EV MSRP price curves just start favorably, meaning going well below ICE consistently geographically, is when you're going to see an acceleration in the decline of ICE, because people they're looking. I mean, people are real. Like, they look at real specs. They have a checkbook. They're like, where am I going to get the best value per dollar? Or I'm going to get the best value per dollar in performance and range. If I buy an EV, it's going to cost me less. I don't have to pay for gas. So that's one thing on that. I want to come back. I missed one point, and I haven't talked about this on the contractual side, because when we think of contracts between battery suppliers and OEMs, I promise I'll make this exciting, because contract discussions can be boring.
Exactly.
We always think in price and supply continuity, and that's what I'm talking: price, supply continuity, Tesla leverage. Tesla gets both, but there's so many other terms in these contracts, and they're really all turning in Tesla's favor now, especially as Amy referred to this momentary oversupply we may be in terms of batteries. Tesla, what they can do in their contracts that others can't do, they can do things like, for example, they can do penalties on undersupply from their battery partners. Meaning, again, they're going to have their own supply, and look, we asked you for 1 million, and anything you undersupply, if you want to be a Tesla partner, you're going to pay a penalty for undersupply. There's a number of things that they can do in contracts just beyond supply continuity and pricing. They can do who's holding the inventory, especially at the end of quarters or major fiscal years. There's so many things that they can do in contracts. How about indemnification from a quality perspective? They can have so much leverage where they're getting, they have the best quality product coming from them to Tesla to be, a qualified supplier to Tesla, where with this recession is going to weed out so many companies, and their terms are going to be nowhere near what Tesla can get. So it goes well beyond contractual leverage with pricing and supply. There's so many things that Tesla can have an advantage on.
And
when is it going to become exciting, Jeff?
That was really exciting for me. My heart rate went up. And probably should get a blood pressure cuff on me right now.
All right.
It was super exciting.
Sorry, Amy. Go ahead.
That was good. It was exciting to me, Jeff.
Yeah.
See,
I was kind of getting excited.
We're nerding out.
Yeah, I always nerd out. I would say that we're also, it's so easy to get caught on the 20 million autos, but we're forgetting this other huge advantage that Tesla has is they ramp energy. This is a recession-proof business. So as the other auto manufacturers are still stuck in the cyclical process where every time you have a recession, then their ability to fund their future products and everything like that gets way worse. Tesla is meanwhile ramping up Lathrop, ramping up Megapacks, ramping up Powerwalls, ramping up solar. Then we're going to have Optimus, AI, FSD coming down the line. So Tesla is just going to be throwing out free cash flow, being able to ever ramp to greater economies of scale, get that cost reductions on their cost of goods, and then just the expertise that they gain from building so many more EVs is going to be a huge competitive advantage.
Yeah,
that's exciting. Yeah.
Oh, go for it, Herbert.
I was just gonna say now I'm excited. Okay.
Hey, Herbert,
well
in your news flash, you missed one of the biggest things coming this weekend. What's coming this weekend from Tesla? FSD 11.
Oh yes. Okay. Yes. But I don't see when they say that. Did you put you're going to put your money on this? You want to put money that it's going to come out this weekend?
Okay. I don't know about okay. I mean, maybe a small amount. Maybe by Monday.
You take that seriously when he says it's going to be this weekend?
It's part of the weekend. Monday's part of the weekend. Definitely by Monday.
So you're staying up all night waiting for FSD 11 coming this weekend, right? Okay.
I mean, it looks amazing.
I know I heard. Yeah.
Yeah, no, thankfully I've been, well, I kind of wanted to talk about energy, but man, you started FSD. That lights me up too. Probably as much as Jeff and supply chain stuff.
Yeah.
But no, I think on the energy business, so Amy, you're in the Bay Area as well, at least part of the time. And so it's the insane amount of wind and rain that we have had has literally brought PG&E to their knees. I have neighbors literally probably less than a mile away, and they're going to be out of power for another 2 to 3 days. And yet here I am, and my neighbor, he has power walls, and we are all able to have lights on. Like, you look down our whole street, our houses are the only Christmas trees on the street, and everything else is completely just black. And I think, as Amy was saying, is, the energy business is completely recession proof because people will always need energy. And actually, I was watching the news last night, and it was specifically East Palo Alto. There was a bunch of residents complaining to PG&E on, like, how come you're not prioritizing our area? And it's typically, at least in that specific case, it's underprivileged, underrepresented, and PG&E has not been prioritizing and getting their lights back on. And again, it's just one of those things where we're in 2023. How come we're dealing with power outages? How come even Texas, right, is as open thinking and as forward thinking as, people are like, oh, the best place on the planet to go start a business is Texas. But like, they're the ones getting frozen over and out of water for more than a week when they froze over 2 to 3 years ago. So it's not just a California problem. It's, it's really, everyone's problem. But the energy business, and like you said, as most of these companies, if you look at most of the tech companies, what are they doing right now? They are pulling back on costs. They're shutting down a lot of future products and focuses to really, again, pull back on the profit and to really, build their bank accounts. But they can't fund these two things. So in the same way, Blockbuster went under because they were trying to fund their retail business and then trying to build a Netflix model all at the same time. And what happened? We all know they went under. And as these companies continue to try to stand up both businesses, Tesla, again, like, a lot of the valuation that Tesla has today doesn't even include, full self-driving, energy, the robot, Optimus, and a bunch of other aspects of their business are just not baked into the overall valuation. So here, Tesla, during this recession, can continue to build the new innovative products. Maybe not necessarily at the same clip, but they get to do all of the research and development because they are very their margins are very healthy. They're actually improving their margins even despite these price drops because they have a plan of what the next 5 to 10 years is. So I'm personally really excited. I don't know, Herbert, if you wanted to mention anything on solar, then you could even.
Well, the only thing on solar is a question for Amy again, which is another big news that Jeff did not know about and probably does not even know about, which is the Powerwall, right? We all heard that, except for Jeff, that that Tesla offered the Powerwall directly to consumers now without requiring them to buy the solar roof. And so does that, Amy, tell you that there is now an abundance of batteries that they're able to do this now? Or what's the reason why they did that?
Yes, and not only we've been told twice by Tesla now. There was a Goldman Sachs conference in the fall that Martin Viecha was at, and he said that Tesla, for the first time in their history, had enough battery capacity to ramp both energy and auto at the same time. That was way back in the fall. And then on the stage at Investor Day, Elon Musk referenced that Tesla now has contracted an overcapacity of batteries, more batteries than they think they need for their very aggressive ramp plans on both energy and auto, because it's very easy to ramp up or ramp down megapack production. So any extra batteries that they don't use, they're just going to produce more megapacks. And then we saw, and they have said, Tesla has said, and Elon Musk has said on earnings calls, on events, time and time again, not only are we going to produce our own batteries, but to our suppliers, we will take every battery that you can send our way. And then we saw how they intend to do that when they removed the requirement for needing to get a solar roof to get a Powerwall, which was always just a battery constraint requirement. That it was the reason why Tesla had that. And if you don't have to pay for the permitting, which is more intense for putting the solar roof in or solar on your roof, and you're just paying for the power wall, you still require some permitting and installation, but it's way less. So it's a very quick product for them to ramp up or to ramp down. And you just see how Tesla plays chess and is such smart managers. They have so many different demand levers that they can pull, and so many different business areas they can ramp up kind of at will.
So I'm Canadian, and why do you call it rough? I call it roof. Am I wrong or are you wrong? I don't know. Rough. I put it on a solar
I'm always
roof.
wrong in the way I pronounce things because I learned my entire vocabulary by reading. So I just said it in my head however I wanted. But I'm from Minnesota, so it's almost a Canadian accent that I have.
And so in terms of solar, the thing that I'm putting my reputation on, I'm going to put my bet on, I still feel strongly, is that there is a solar farm. Tesla's going to announce a solar farm. People are laughing at me. No, it's not going to happen. I know Jeff and you guys keep laughing at me.
Oh, no,
They
I'm
go,
right there with you. I read a whole article on it.
Okay, good. Thank you. But you were laughing because I was saying that they were going to announce it at Investors Day and they didn't. And so I was a little disappointed about it. And you guys go and see. But I'm like, no,
I thought you were
there's
too.
no. What's that? You're with me?
I thought there was going to be a solar roof, a solar farm.
Not solar roof. Solar farm.
I mean solar farm. Yeah,
solar rough.
To get to the sustainable future, it really would help propel us there so much quicker. And it just seems like the breadth of Tesla's ambition. But I really am seeing like Zach Kirkhorn just reining in the plans to like, okay, let's get this Gen 3 platform, Gen 3 Giga Mexico going, the Gen 3 platform going. Let's get the mega pack factories going.
No.
And then you can have your solar farm.
No. It's not happening. Is that Tesla? Tesla doesn't do that. They need 3 pillars. And the number 1 pillar is free generation from solar.
Well, once they have Optimus can build the solar farm. So
wait till Optimus before we do it? Come on. No.
For the record, I'm sensing a great Midwest accent out of Amy, but nothing wrong with her accent.
Nothing wrong with rough? You okay with rough?
Nothing. I mean, we can go word by word and see where we all land, but nothing's wrong with that at all. No, the energy side of it, I'm glad John brought it up. And Herbert, I love your excitement about it as well. We don't talk enough about energy. And I love Amy's idea of like Tesla probably needs to have an energy day. I think that makes a lot of sense. I think it could be kind of the birth or the kickoff of it. I think they put out the big vision right on Investor Day, but then getting down to like, this is how we're going to roll it out. And this is how we're going to scale it. And we're seeing it though. We're seeing it in all the press releases, as you brought up with Powerwall. We're seeing it happen right before our eyes. But to me, it's another example, just like what Tesla is doing to the auto industry. They're being equally, if not more disruptive in the energy industry. And it just doesn't get enough airplay. The way analysts follow or cover the stock, you've got, auto analysts, but, then you have energy, and does anybody really have the full picture? I think some analysts do. But I think Tesla also has to continue to kind of like tell that story, maybe formally launch all the exciting work that's happening out of Lathrop. And really, we're going to see this probably scale all over the world pretty soon.
Yeah, no, I think the energy business definitely doesn't get enough love, and ultimately this could become their energy, the battery, the storage. They obviously also at Investor Day announced that in Texas you can pay, I think it's like $30 a month, and you get as much charging as you want at night. I mean, they're becoming an energy business, which in itself is not so. Outside of literally building batteries and building solar and storage, they're becoming they're becoming an energy company. I got a $310 check from Tesla for providing energy back to the grid over 5 days last year when there was high pressure on the grid. And so even in that, even if they aren't an energy business, they're becoming one because they're becoming a virtual one. So now not only are, even if they actually want to become one, which they are, they have a virtual business that is being used even today, especially in the Bay Area. It's just one of those things that they can use. But yeah, any closing thoughts? I know we talked about a lot. We didn't even get into the V4 supercharger, which they haven't released the speeds yet, but the people in the Netherlands are going crazy right now with 16 stalls. Everyone, and I know a lot of Europeans just running out to driving there, taking even a couple days to get out there just to check it out. But I think that they've tethered the speeds at 250 kilowatts. So, but any closing thoughts before we wind down?
Just looking at
or not.
I'm looking at can you put up Cindy Rose comment? They don't need to do solar farms. Too many others doing it. We will just supply the mega packs and software management. But my understanding is, Elon has said a few times that it just needs 100 mile by 100 miles. So is there enough solar companies out there making enough that
He's
we don't need to
thinking
do
bigger. I mean, I think that's the thing is this is the path that they said at Investor Day they were going to do first. They were going to contribute in the way that Tesla was most valuable, which was going to be the EVs and the mega packs and the power walls and their core competencies, and really ramp those factories and those businesses. But the solar farms, when you have multiple of them, now you're just increasing the complexity. Now you have to go through all those permitting processes, the environmental approvals, and everything else. Whereas because we have an existing utility grid structure and energy structure, you really could have one gigantic solar farm in many different areas and only have to do all that stuff once, and you could get to that sustainable future far sooner. So it just becomes a matter of how impatient does Elon Musk get that the competitors aren't doing this fast enough, and that it's on him and that he needs to make it happen. And if it becomes on him and he needs to make it happen, then he's going to do it in the most efficient manner possible. And that will be some gigantic solar and wind farms powered by Tesla Powerwall sitting there, and it will just be done over, and the world will be on to the next era of abundance.
Nice.
All right. Well, first off, Amy, thank you so much for just ending and really dropping your knowledge there. But please give all three of our wonderful guests today a follow. Amy, SF, she's at SF, 3_. Make sure it's 3. Tahoe. We have Jeff Lutz, who always drops all the supply chain knowledge. So he's at the Jeff Lutz. And then obviously we have Herbert, Brighter with Herbert on YouTube, but also at Herbert on Twitter. I really appreciate all of your knowledge dropped today and just catching up on the latest news. So thank you again for tuning in, everyone.
Thanks, everybody.
Yeah, thanks. Bye.
Later.